Good evening, guys. It's Working, bringing you a quick update on Bitcoin on this New Year's Eve. Hope you guys are having a wonderful evening, and Happy New Year's, guys. For some of you, you may have already brought in the New Year. So if you have, Happy New Year. The rest of us, guys, we're getting ready to celebrate a New Year's here I'm on the East Coast of the United States. So it'll be New Year here in about 3 hours, 3.5 hours, somewhere thereabouts. Anyway, guys, we're looking at Bitcoin to the U.S. dollar. This is the 4-hour chart on Coinbase, and last time we spoke, Bitcoin was trading right up above this zone, sitting right on top of this $3,800 support. And of course, it's breaking back down, almost testing the bottom of our support zone here between 3,800 and 3,600. Price came back down, dropped to about 36.20 on Coinbase, and is sitting currently trading at about 36.80-ish, somewhere thereabouts. So the question is, guys, what is this going to do? And as I said yesterday, if 3,600 does break decisively, I think it'll be a very quick drop down to this zone here between 3,400 and 3,250. And conversely, if we can rise up, we can get some volume behind this and get a nice break to the upside and can start consolidating into this 4,120 to 4,000 zone with volume to confirm that, I think there's a good chance we can go higher. If we get into this zone without volume confirmation, guys, if it's just a little bit of a short squeeze, something along those lines, I think there's a good chance, even if it continues upwards just briefly, without that massive volume to back it up, guys, it more than likely is just a manipulation by market makers, and I would definitely consider a short up in this area between 4,400 and 4,315. So as of right now, guys, we're looking at overall volume. Overall volume for the day is sitting at about 4.5 billion. That's very, very weak. So that is ripe for manipulation. But it's also something that you would expect based on what we're seeing here. And what are we seeing? Well, I told you yesterday that price was consolidating. We looked like we were getting squeezed, and we're getting more of that today, guys. In fact, you can just see it right on the chart. I drew this out yesterday, this kind of descending resistance line that price has been respecting. We can see it's been wicking up on top, hitting that zone, unable to break above that zone at all. And we also have this ascending support line that has been in place as well since about the 17th of December, right down here, guys. So there's no question that we are getting a series of higher lows, lower highs. And anytime that happens, guys, you get price getting squeezed like that. What do you expect? Well, as it approaches the apex, you expect a larger move. And that's exactly where we're at now, guys. Price is getting squeezed into this apex, and we are expecting a larger move. And we're seeing that with low volume. Volume has been dropping off over the last week or so. And of course, that is what you would expect anytime you get that consolidation, that squeezing of price together like that. And usually that happens. We get that consolidation, or excuse me, that drop in volume just before you get kind of an explosion. And again, the question is, are we going up? Are we going down? If we come over here and we look at longs versus shorts, actually, let's go ahead and start with our moving average, exponential moving average. This is on the daily chart, guys. We can see that price just broke below yesterday's candle, which we're still today, at least in my time zone. But yesterday's candle closed just below this 21-day EMA. Today's candle opened up below the 21-day EMA. So if this candle closes again below that yellow line, that 21-day EMA, guys, that's typically a good sign of a momentum shift in favor of the bears. Now let's see if that happens. We are just kind of, as I said, guys, just consolidating, getting squeezed here. And I do think we're going to have an answer here very soon within the next 24 to 48 hours. I think this thing very likely could make a rather explosive move either up or down. And what I'd like to see if we do end up breaking up is a break at least above this 50-day moving average, this orange line here. If we can get on top of that 50-day moving average, guys, that would be an extremely bullish sign in my opinion. If not, I think there's a good chance that we're just going to continue back down. And we're also going to be watching out for a bull and or a bear trap, guys. So what are we going to be looking for? If price does end up breaking down, I'm going to be watching very closely. Of course, I'll be watching our support that we have lined up right here, guys. But more than that, I'm going to be watching this area right back here, the start of this larger move. This order block right back here, guys. I'm going to be watching for a possible breakdown, hitting that prior order block, and then reversing course. In other words, trapping people into short positions, reversing course, and bringing it all the way back up again, or even liquidating long positions, and then of course bringing price right back up. So that'd be a bear trap. That's a real possibility, and if that does happen, guys, I do think that it would happen. That reversal would take place somewhere around 3,500 down to about 3,450, somewhere in that zone, guys, is where I'd be watching for that reversal. Same thing is true to the upside, guys. We could certainly get a bull trap, happens all the time, and we're going to be watching on that. We're going to be watching this prior high. So what I would need to see is this prior high taken out. to confirm an uptrend here. So we're looking at this area right here, sitting between about 4,200-ish. If we can take out 4,200, in my opinion, guys, this thing might have some legs, especially if we can get back into this zone. But we have to do that with volume. I was telling you guys yesterday, if we get a decisive break up into this zone here without that volume backing it up, and of course we also have to watch longs versus shorts. I'm gonna go ahead and bring that up now. So, and we can see shorts are falling off the board right now, while longs are slowly stacking. Well, I shouldn't even say slowly, they just are stacking. So why do I bring that up? So let's say price ends up breaking up here, guys, up here. And what happens with longs and shorts? Let's say price breaks up and shorts start to stack and longs start to take profits, start to fall off the board. Very likely they're going to, and we have volume to back that up. Very likely price is going to continue to go up. I would call that a very healthy looking climb if that does happen. But if we break up and shorts get liquidated, of course shorts get stopped out, there's very, very low volume, and longs start to stack, that's going to be a formula for an absolute bull trap, guys, and I'd be looking to short Bitcoin somewhere in this zone between 4,300 and 4,400, somewhere in this area. So guys, you make sure you're constantly keeping an eye on all indicators, and don't get fixated on just this little wedge here and fixated on a larger move, and as soon as it breaks one way or another, enter into a long or short position, guys. You don't want to do that. You always want to make sure you're taking in all the information around you before you end up doing that. All right, looking at this is on the 4-hour RSI, again giving us confirmation that we are getting squeezed tighter and tighter. Also, it looks like it's setting up for a larger, more explosive move as we approach the apex right in here, guys, and we're getting there now. So again, we're getting a lot of signs, multiple indicators that tell us the price is getting squeezed, and we may see more of an explosive move in the next 24 to 48 hours, somewhere thereabouts. Now, just briefly looking at this from an Elliott Wave perspective, guys, as I brought out yesterday, and again, I have to put my disclaimer in here that I do not like Elliott Wave and low volume markets at all, but just take this with a grain of salt. As I pointed out yesterday, if we were looking at this as a 1, 2, 3, 4, 5, actually that 3 is way down here, not up there, sorry about that, guys. 1, 2, 3, 4, 5, and then of course we're trying to figure out if we're looking at an ABC, what type of corrective pattern that we're seeing. If this thing could turn out to be some kind of A, B, and kind of a flat here, and then we continue to the upside. That's absolutely 100% possible that we just get some kind of a flat here. No question about it, that is a possibility, guys. But it is also possible that we just have your standard ABC correction and we're coming down much, much lower into this area here. If that does happen, what I'm going to be watching, go swing low, swing high. Obviously, I told you guys we're going to probably come down into this 3,400 to 3,250 support down here. That jives almost perfectly with the 786 fib and this 8865 fib level right here, guys. I mean, almost perfectly, literally. And that's not a coincidence, guys. It's just amazing how fib levels work. They're fascinating. I'll have to do a whole video on fib levels one of these times, guys, on Fibonacci. Just incredible, guys. So you find those numbers and everything from nature to, well, I'll do a whole video on it some other time. But anyway, guys, my point is we're definitely seeing a scenario where we could get explosive action up or down. And if we are going up, if we are looking at this as an overall primary wave 2 that we're currently in the process of finishing, so we're looking at finishing, so this being a 1 coming down for the 2, possibly it ended here, possibly is going to come back down and end down here, whatever it happens to be, then we'd be coming up obviously for the 3. And the question is, where's that 3 going to give? Excuse me, where's that 3 going to hit? Well, again, and this is extremely sloppy, guys. And again, not a fan of Elliott Wave, but just to get kind of an idea of what we'd be looking at, we pull our fib extension out, and we target just a basic 1-to-1, which is extremely low, typically on your third waves, especially if we get any kind of volume at all. Your third wave is going to target a 1.6, 1.8 typically, but let's say we just target a 1-to-1. We'd be looking at somewhere up in this zone here at about 4750, 4800, somewhere thereabouts for just your bait for just a 1-to-1. However, if we do get some volume behind this, I can definitely see a target somewhere up north of 5,000, possibly testing our prior support levels up here, between with the bottom of which sat at about $5,450, and that would be a almost perfectly hitting that 1.618 fib level. Now, again, I'm not saying that's going to happen at all, guys. We definitely need to see a massive influx of volume for anything like that to happen, but it's a possibility. It's on the board, and I just want to make you guys aware of that. Excuse me. So personally, for me, guys, nothing has changed. This is a no trade zone for me until we do get confirmation of one direction or another. If you are, unless you're a long-term holder and you're dollar cost averaging in for the long haul, by all means, dollar cost average in. But for you day and/or scalp traders, again, this is not financial advice, but in my opinion, I'm going to wait for a better trade setup. I'm going to be watching if price comes down here. I'm going to be watching it very closely, possibly entering into a quick scalp trade. I may buy down here, target between 38 and 3600. If price comes up here with little volume, I may short it between 4400, 4315, targeting about 4000, somewhere thereabouts, guys. That's a real possibility. But again, if we do rise up and if we get that volume to back it up, there's no way I'm going to short it at that point. I'm not going to fight the crowd. I'm not going to fight the wave. I'm going to go with it if that does happen. So again, guys, I don't want you to get fixated just on this explosion in one direction or another. I want you to make sure that when this move happens, if and when it does happen, you're taking it, you're watching the volume, you're watching shorts versus long positions, you're watching all those things and taking that into account before you enter any kind of emotional trade. Whatever you do, you don't want to get caught into FOMO or FUD. Just be very careful, guys. And with that, I'm going to go ahead and wrap things here. If you guys have any comments, questions, suggestions, please let me know in the comment section below. As always, I certainly would appreciate an upvote if you have enjoyed this content. Till next time, guys, have a great evening. Happy New Year. This is Working, signing out.